John Ulzheimer is known as one of our nation's most recognized credit experts. Having worked for 28 years in the credit industry, John has become one of the most prolific speakers about credit and the go-to authority on answers to credit-related questions. Credit Countdown with John Ulzheimer.
Hello, my name is John Ulzheimer, and I am a consumer credit reporting expert. In today's educational video, I'm going to discuss why some people have errors on their credit reports. And so just to set a baseline, you have many credit reports. However, the three that tend to be the ones that people care most about are the three companies, Equifax, Experian, and TransUnion. The credit reporting agencies maintain records on over 220 million consumers. And since there are three of them, that means that they have over 660 million credit reports in commercial circulation today. According to the CFPB anyways, there are over 16,000 companies that report information to the credit reporting agencies on a monthly basis. And so we're talking about literally billions and billions of bits of information about consumers and their relationships with banks and credit unions and financial services providers. The reason I'm telling you this is because the volume of information is truly colossal and mistakes can happen. There have been three commonly recognized and commonly cited consumer credit report accuracy studies that have been performed over the past decade. One of them no one really takes seriously. The other two people tend to take more seriously. One was done by a consumer advocacy group called PIRG, P-I-R-G, the public research group. They basically indicated that 80% of credit reports have errors, but no one actually believes that. The other study was performed by an organization called PERC, P-E-R-C, the Policy and Economic Research Council. PERC indicated their studies, which was much more well done than the PIRG study, is much more scientific rather than just kind of thrown together with bubblegum and tape. The PERC study indicated that less than 1% of consumers had what they refer to as meaningful errors on their credit reports. And there's a reason why that word is used. Meaningful means that it could cause someone's credit score to be lower, and therefore it could have a meaningful impact when that person goes out and applies for credit. The third study was performed by the Federal Trade Commission, and the Federal Trade results were published in 2013, and that's still generally cited as one of the studies with respect to credit file accuracy. And essentially, the FTC indicated that about 1 out of every 5 consumers have errors on their credit reports. So it's 20%. It's not a huge number, but if you're in that 20% and the error on your credit report is problematic, meaning that something negative is on your credit report that really is wrong, there's a possibility that that can have a negative impact when you go to apply for some form of credit down the road. It's not a guarantee, but it's certainly a possibility. So you're going to want to get that information corrected. No one has a credit card with Equifax. No one has an auto loan with TransUnion. No one has a personal loan or a student loan with Experian. No one has credit with any of those companies. You know why? Because those companies aren't credit reporting agencies. And generally speaking, while they do other things, they're most commonly known from consumers anyways as being the databases that house credit report information. Equifax didn't make the balance on your credit card wrong. TransUnion didn't make a late payment on your auto loan wrong. That's not why errors occur. TransUnion didn't indicate or didn't make you file bankruptcy. That's not what these companies do. Generally, what happens is a company that furnishes information to them may have information incorrect in their systems, and then when they furnish information to a credit reporting agency, that's when an error becomes resident on your credit report because it has been furnished as incorrect data to a credit reporting agency. I would suggest that most consumers don't draw a line or a distinction between the two, but that's the reality of it. Most of the errors on your credit reports are caused by the companies furnishing incorrect data to the credit reporting agencies. Still, you have a right to dispute that information with the credit bureaus and with the lender or the furnishing party. It doesn't really matter. You have a right to dispute it at both locations and then have the information corrected. Third way, or another way that incorrect information can end up on your credit report, and this is much less common, but it does happen from time to time, and that's in the scenario of what's referred to as a mixed file or a confused file. And I know that those terms get thrown around quite a bit, and they get thrown around incorrectly quite a bit. But in credit reporting nomenclature A mixed or confused file means that belongs to one person has been mistakenly placed on another person's credit report. So the lender did not furnish incorrect information to the credit bureaus. They furnished correct information to the credit bureaus, but the credit bureaus unfortunately have associated that incorrect piece of information with a consumer who it doesn't actually belong to, and then therefore that person's file becomes mixed with the file of another person. The final way that incorrect information can end up on your credit reports is obviously in cases of fraud. If I apply for credit in someone else's name, that's fraud, that's a crime. So if I apply for credit in someone's name and the account is opened, credit is issued, say for example a credit card, then that information is very likely going to end up on the consumer's credit report incorrectly because they never opened the account. It's a fraudulent account. Once the consumer finds out that that information is on their credit reports, then they're going to also be able to find out that fraud did occur. Someone applied for credit in their name. They got an account. They may have even actually incurred debt. For example, if it was a credit card, they made purchases with it, and the consumer will be able to get that removed from their credit reports. They may have to jump through some hoops, fill out some paperwork, sign under the penalty of perjury that they did not open the account, they didn't benefit from any of the money spent on the account. And then once the credit reporting agency finds out about that, then they will permanently block the information from ever appearing on a credit report again. So that's it. Those are really the only ways that incorrect information can make its way to your credit report. Of course, if you find something incorrect on your credit reports, then you can file disputes with the credit reporting companies, and they have an obligation to perform an investigation and then correct the information and then send you a free copy of the report on the back end so that you can see what the results were of their investigation. So thank you very much for watching. I hope you learned something, and have a great rest of your day.
For more videos and credit tips from John Ulzheimer, go to www.tradelinesupply.com.